All right. Good morning, everyone. Thank you so much for joining. Today's topic is short sales and foreclosures, right? So we'll have two parts of this. So today we'll try to go over much as possible, and then on Thursday we'll continue and wrap that up. Okay. So today we want to cover what is a short sale, what is the difference between short sale and foreclosure, what is the process, um, who qualifies, which party needs to approve it, and what role you play as a realtor in short sales or foreclosures. And all realtors should know the process. Everybody should know the terms. So if a buyer knows more than you, that's a problem. Okay. So as realtors, that's why these meetings are for. So for short sales and foreclosures, we'll start off with what is a short sale, right? A short sale occurs when a home buyer sells their property, right, or sells their home, and the proceed of the sale is not enough for the mortgage liens, right? And the seller doesn't have enough funds to bring to the closing, right? A successful short sale transaction includes all liens holders to accept less than what is owed to them. So let's break this down, right? So basically, one is that the buyer stop making the payment, right, to the lender, and they don't have enough savings to even come up with those that money. So let's pretend that there's the property's loan value, right? The mortgage that's left is 500,000, right? If the property is worth the mortgage amount is 500,000, but you as a realtor think that the property is only worth 400,000, right? And there's $100,000 difference. So the bank is not gonna just say, "Hey, fine, we're gonna take $400,000." So there's a process of that, right? We'll go over that in details, but just know that hey, short sale is always the bank is willing to accept less than what is owed to them. And if there's two banks involved, if there's two liens, both of them have to agree to that, right? If both parties agree to that, and then they will say, "Hey, fine, we'll take 400,000, and we'll take $100,000 loss." Then your short sale is approved. Okay, and we'll go through the process. Also, when you guys see REO, right, that stands for real estate owned, or REO for short, right? This is when a property is already owned by the bank because the borrower defaulted and could not afford that property. Okay, they couldn't go through the short sale. Nothing happened with foreclosure. Now is REO owned. The bank completely owns that property. And in Stratus, if it's a REO, you will see the letter Y stands for yes, that this is owned by the bank, and there's no other seller involved. Okay. Another term you should know is the servicer, right? Who's when the owner is making a payment, sometimes they're making a payment directly to the bank, and sometimes they're making it to a third party, which is a servicer, right? That's handling the payment for them for behalf of your bank. So when you're talking to the potential seller that wants to list the property, you want to know who the servicer is and who the bank is. Okay. We already know what's an investor, borrower, purchaser. Another important is GSE, right? That's an acronym for government sponsored enterprises, which includes Fannie Mae, Freddie Mac, right? All these companies. What is a mortgage and a mortgage note, right? A mortgage is a finance. We know that as when you're purchasing, you need a mortgage. It's a loan, right? And a mortgage note is agreement to pay that mortgage, right? If the seller does not make that payment on time, the bank will demand that they get the property back through the court system, right? Through the court system, there's two different things. One is deed of trust, right? And another one is deed in lieu for foreclosure. You have your options for loan modification, right, which we'll go over in a little bit later on. And another term is notice of default, or NOD. This is the notice that the servicer or the bank sends it to the borrower when they default on their loan. Okay. Notice of sale, foreclosure sale, foreclosures, right? Just know the foreclosure is a legal process when the person is going stop making the payment. Couple of programs or names you should know. One is called HAFA. HAFA is Home Affordable Foreclosure Alternative. Right, is a program by the U.S. For short sales. Right, they just trying to help out those sellers if they actually have a hardship. Another one is called HARP, which is Home Affordable Refinance Program, and then HAMP, which is Home Affordable Modification Programs. So just know that there are programs out there for your sellers, or um, before they put it on the market, they can talk to a loan officer and see what their options are. Okay. Yes. So there's two different terms. One is non-judicial and one is judicial, right? And most cases in New York, we will see judicial, where if you stop making the payment, the bank has to take you to the court for the auction, so they can actually get their money from the highest bidder, right? And the process of that, right, for the mortgage is that the borrower defaults on a mortgage, right? The borrower stop making the payment. The lender notifies the borrower of mortgage default. They send them a notice. Hey, you're 30 days late. You're 60 days late. You're 90 days late, right? If the borrower cannot bring the account into good standing, the lender hires an attorney. Okay. The attorney begins the foreclosure actions, right? Basically sends them an order, a notice, right? It files for the summons, complaint, and less pending, right? And then a referees is a court person that reviews the foreclosure, right, paperwork, and see how long they've been defaulted, what the value is, and stuff like that. The judgment of foreclosure and the sale is issued by the judge. The judge is saying, fine, we understand that this person stopped making the payment. Now the lender can go get their money through a foreclosure. A foreclosure sale is advertised, and properties offered to sale to the highest bidder. This process usually happens, like we said, before COVID, in Nassau County and in Queens County, where we actually physically take our clients to the court, and there's maybe 50 other agents or 100 other agents with their clients there, and everybody just submitting a bid, and this is all live. You do your research and say, hey, you want to submit an offer for them, a bid for them. Whoever is the highest bidder, they will get that property, or have the rights for that property. They have to bring in 10% at the court for that, for you to bind, but then the remaining 90%, you still have 30 more days to bring that. Okay, different courts, different terms, but this is the process. So this way, your the seller has enough time, right, or enough notices to make that payment. This only goes here after months and months of them sending them messages or through mail, contacting them to bring the payment on time, or bringing the account on good standing. Okay. Any questions, concerns so far, guys? Okay. So in short sale, the listing agent's role, right? Let's go over that. Yeah, but before that, for there's two available options for distressed borrower, right? So the person stopped making the payment, right? What can they do? If they want to keep their property, they can speak with the loan officer and get refinance their loan, right? Get new terms. That's only if they qualify, right? Or they can contact their current lender and see if they qualify for forbearance or loan modification. Okay. If they cannot stay in that property, they can either sell it and bring cash to the closing. So they sell the property at, let's say they owe 500,000, They sell it for 550. They pay $500,000 to their lien holders, their lenders, and there's no issues there. But if that's not the case, they can either do deed in lieu foreclosure, which simply means that they're walking out. They have a property, they owe X amount of money, they're just leaving it to the bank. They're saying, hey, we don't want anything to do with this property, I'm just leaving, right? Or they can go through the short sale process or foreclosure. Okay. Okay. So for short sale consideration, right? The biggest thing is that the your borrower, right, that's potentially wants to sell that property need to have a hardship. That's the main thing. They need to have a hardship, and we'll go through what is a hardship and what qualifies as a hardship. Okay. When you're a listing agent, let's say you put in a property on the market, right, and you get offers, and your seller accepts that offer, still means nothing, right? The lender who actually is the owner for the property, they have to agree to it. So the seller can say, or the owner can say, hey, I want to, sell it for 500,000, and you get an offer for 500,000, but if the bank doesn't agree to it, there's a problem. Okay. So short sale approval by investor is not guaranteed. Okay. Short sale requires borrower to complete and submit a lot of paperwork. So, in one short, expert says that it takes more documentation to get out of the mortgage than it took them to get into the first place. So, when you want to purchase a property, it seems very easy, seamless. Hey, you just signing paperwork, you're good to go. When you want to get out of that because you owe 400,000, 500,000, big numbers, or maybe two or three different lenders, it's really hard for everybody to agree and get out of that. So it's a lengthy process with a lot of documentation. We still don't want to discourage you for that, but just letting you know that there's a lot more paperwork involved. Okay. The investor requires borrower and sellers to have a valid financial hardship in order to approve that short sale. Okay. Short sales may take longer to close compared to non-short sale transactions. There's no guarantee for foreclosure to be postponed while attempting for a short sale. So maybe you, as a listing agent, you put it on the market as a short sale, but meanwhile the bank had enough. They just sending it straight to the foreclosure and letting that bidding, start, and whoever wins that highest bid, they will sell it to that, right? Instead of short sale where you're the agent saying, hey, no, we can only sell it for this much, but they want to be the judge and putting it in the court. Okay. So all these terms we just went over, right? There's also called recourse loans, right? Or non-recourse. In New York, I asked Josh earlier too and everything, majority of the loans are non-recourse, where the lender may be limited. So let's say going after the funds that's owed more uh, than the property. So let's say, if it's a short sale and they approve the short sale and there was $100,000 difference, they will not go back to you or your borrower for that $100,000. If they were in a recourse loan, then they can. So just know that majority of them are non-recourse. Okay. So if you are in short sale, right, and foreclosure, it does affect your FICO score. So your credit scores do get hurt. So let's say you're starting off at 680, right? You're starting at 680, and now you have a late payment for 30 days on your mortgage. That 680 can drop to 600 to 620. Okay. Again, for 30 to 60 to 90 days, that's the effect it's having. Okay. So if you actually go through short sale and they approve it, it will even drop a little bit lower to 610. Okay. Uh, Foreclosures, same thing. It will drop. If it's a bankruptcy, it will drop to the lowest to 530. Okay. So if you're starting off at 780, from all these numbers, it can drop with bankruptcy to 540, or for short sale 620. Okay. So this is a time for FICO score to recover after these events. So let's say you miss one payment for 30 days, right? In order for you to recover that 30 days for your FICO score, it can take up to 9 months. That's a long time. Same thing up to 90 days. It can take up to 9 months to recover that FICO score. Okay. And if it's a short sale, 3 years. If it's bankruptcy, 5 years. Okay. So this to show you that making payments on time matters a lot, right? Okay. So now let's say your seller wants to sell that property as a short sale, right? And they want to purchase a new property. How long do they have, right? So different GSE companies, right, will have different rules and regulations for that. So Fannie Mae and Freddie Mac, for foreclosures, you have to wait until 4 years until from completion date. Okay, if it's a short sale, 4 years as well. But if it's a bankruptcy, Chapter 7, 4 years, Chapter 13, 2 years. And if it's a FHA loan, right, foreclosures, 3 years, short sales, 1 year, Chapter 7, 2 years, and Chapter 13 within 1 year. Okay. So this is a big one, taking on the short sale listing. So now if you have a client that's talking to you and knows that you are a realtor and just talking to you, hey, I'm going through some issues with making my payment. The first thing you want to ask is that whether or not they have valid financial hardship, right? If they don't have this, and you can go through all the other steps and spend a lot of time on this file, and then all of a sudden the bank will not approve it, right? Because there's no valid hardship. So what determines a financial hardship, right? If you lose your job, that's your financial hardship. Okay. If you lose your hours, if you're underemployed, if you move or your job location 50 miles plus, right? If you have a business and the business closed down, if you have an illness or if there's medical cost, right? Your health insurance increases. There's divorce or death of spouse, right? Increase in mortgage payment, right? Or if there's a natural disaster, okay? And what is not considered financial hardship, right? Loss of equity. Let's just say the market is just going down. The bank doesn't care. You paid for X amount of money at that time, goes up or down, that's your problem, not theirs. You want to resize, right? There's an increase in your family size, right? Or you're just spending a lot of more money on other expenses. This does not qualify. Any of these do qualify. Does not mean it's not guaranteed that your lender will accept it, but they should accept some of these here. Okay, right. So you determine that there's a hardship on it, right? Maybe there's a death in the family, there's an illness, something that's real, and that is really hurting them. So you want to help them out, right? You want to determine who owns the loan. You want to ask them, hey, do you have one lien, two liens? How can we, what type of liens you have and the amounts on it, right? And then you want to add those up. Let's say they have one loan for 200,000, and then they have another loan for 100,000. So that's 300,000 that they owe, right? Right. You want to determine if you have enough time for that short sale. Let's say there's been already 2 years that they stopped making the payment, right? The bank is already going through foreclosures, and you're trying to submit a forced short sale, which is going to take a lot longer. The bank does not want to deal with you. The bank will say, no, it's already undergoing through foreclosure, and we're going to take it to the court and give it to the highest bidder. We don't want to go through you as an agent and list it on the market and see what kind of offers you get. We'll do that for you, right? So you want to contact the servicer or the bank, right, and ask them, hey, we have a client, he's going through hardship. This is, I just need all the documents from your end, and they'll email that to you. Okay, you'll have the borrower or the seller sign that authorization so the bank can speak with you, right? You want to verify your borrower's financial hardship, right? And they have to write a hardship letter, right? Which we have templates for. We can show you. You're basically describing when did the hardship start, why did it start, how's it hurting you, and you're basically asking them to reduce the loan amount because of their hardship, right? Determine the payoff amount, right? And estimate equity, see if there's any equity in there or not, right? And you want to order a title report. So this way the title report would have all the liens and everything. So this way you're not in the middle of the process and then finding out that hey, there's another lien holder. Instead of two, there's three lien holder, and the third one, we owe 50,000 to that. That $50,000, that loan, the bank has to agree as well, right? And then you want to complete all the initial listing paperwork, and you want to follow all the services protocol, right? And the commission concerns. The maximum they allow is 6%, three and three, three to the buyer, three to the listing agent, but that number can change. Okay. So we spoke about earlier with the hardship, they can do either refinance, lender workout, they can sell it, right? Do a short sale, or just leave the property, or go through foreclosures. If there's no hardship, right, they have to sell it. They have to bring cash to the closing. They can rent the property, right? Um, or go through foreclosures or refinance, right? And then this sheet here, which you're consulting with the seller now, right? You're asking for all these questions here, which I'll share this with you guys. Okay. So again, with short sales, it's a lot. So in the next meeting, we'll go more in depth with short sale and foreclosures. But so far, what we went over, any questions, concerns on this, guys? So someone tells you, hey, I'm going through a hardship, I cannot make my payment. Will we know the process? Okay. So if the bank does approve it, so right, let's just say there's two lenders, you'll get a letter like this, right? That service A agrees to release the security and the interest of the collateral recipient of $1,000, right? And then we'll tell you, hey, they will not sell it, or they will not take anything less than this amount, and they will also spell out your agreement for your real estate commission. Okay. Or they might give you a more breakdown of a list of these things. Hey, there are conditions for the approval as follows, right? And they might lay out these things. So as a listing agent, you want to follow those, right? And your lender, right, when there's a hardship and you're putting it on the market for 400,000, that's what you want to pay the bank. The bank will say, hey, now list this property. You're a realtor, now list it on MLS, right? We want to see offers come in. We want you to show it. But maybe you guys notice now, if you see even on Zillow, if you see a short sale property, or the property just like the price is way too low, and you're trying to get in touch with the listing agent, and no one is picking up your call, no one is replying to your text messages, and it's been going on for days and days, that is because either that listing agent is just already has a buyer on the side, or they're just not doing what they're supposed to be. As a listing agent, you want to give everybody a chance to see the property if possible. Give them all if you have a title report, tell them about all the issues, right? And be transparent with them. But like I said, a lot of agents out there with short sales will just put it on the market just because the bank requires it, and not actually show anyone, and that's a problem, right? Right, so we're running out of time. We'll continue on this on Thursday. But before we go, any questions, concerns, guys?